welcome. I'm super excited to introduce a new partner for you, Frazier and Deeter, and I'm joined here by CEO and Managing Partner Seth McDaniel. We'll also be joined by Terry Lawson, partner Donna Beatty. As I promised you, we're going to bring the best resources in the world, and certainly we have one here that's the best. We're thrilled about this new partnership. And thank you for considering the Russell Innovation Center for Entrepreneurs as someone that you want to pour into the community. But you know I'm excited. So I'd love to hear, Seth, what makes you so excited about this partnership?
Well, Jay, as you know, our brand promise is investing in relationships to make a difference. And we've had the opportunity to serve the Russell family for a number of years in various capacities. When we heard about the Russell Center's mission to support minority entrepreneurs, it was a perfect opportunity for us to continue to invest in the relationship and make a difference in this underserved community. Frazier and Deeter is excited to have a multi-year partnership where we're investing time, talent, and dollars to support the Russell Center's mission. So thank you very much.
That's it, guys. I promised you that we bring you the best, and this is just another example of one of Atlanta's best firms pouring into our community.
Hi, I'm Belinda Prince. I am the COO of the Russell Center, and I'm so excited today to be here with Frazier and Deeter, three partners, and we're going to have a discussion about what you need to know about year-end taxes as the year approaches. We want to make sure that all of our entrepreneurs at the Russell Center are ready for what's coming next. So why don't we just start by introducing and meeting all of the partners here today.
Hi, I'm Donna Beatty, a tax partner at Frazier and Deeter.
Hi, I'm Terry Lawson, a tax partner at Frazier and Deeter.
Hi, I'm Eddie Bradford Jr., a tax partner here at Frazier and Deeter.
Wow, so we couldn't get any better than this. Three tax partners sitting there together. So, between Eddie, Donna, and Terry, we'll get all of our questions answered today. So one of the questions I always get from entrepreneurs is, when do I need a tax advisor? How do I know? Is it when my company is at a certain revenue, or is it after I've been in business for a while? But how do I know as an entrepreneur?
Well, the answer is you should have a tax advisor as soon as you think you can afford one, and it's a great investment when you think you can afford one. There's so many decisions that start just from formation that will direct how you have other decisions. So you need to get your formation set up, and what that means is you need to know where you're trying to head so we can give you good advice on the correct formation to get started.
Wow. And so this has been a rough, 18 months or so for all of us. And one of the things that a lot of our entrepreneurs are asking themselves is, what should I do differently because of COVID? If some have had gangbuster revenue and sales and others have not. And so what should I do? How should I adjust to that?
Well, there's some things that we can do, especially if they're making money. We want to make sure that they're taking advantage of all of the different tax deferral strategies that there are, things like 401k or doing IRA, doing health savings accounts. Those are all big things that have to be funded by year end and will help shelter some of their income for them.
Great. Eddie, anything else that you want to add to that, or?
Well, accelerating expenses, if there are equipment or expenses that you feel like you're going to incur in the first quarter 2022, maybe move those into the fourth quarter 2021 and pay for those expenses before year end.
So if I want to have a top 2 or 3 or 5 things that I should be doing in terms of starting my own company, I haven't really started it yet, and I'm just getting to the process of thinking about doing it. What should I think about? How should I think about structuring my company? What should I do at this point?
I think that the top thing I would tell somebody that's starting a business and trying to figure it out is that I call it, don't let taxes wag the tail. So you're in business to make business. So that's what you want to start with, and that's what your vision and that's what your goal should be. So you vision where you want to be, and then you make business decisions on that. And then with a good tax advisor, we can help mix in some tax planning strategies to help that, but just don't be all about the taxes, because at the end of the day, I'd rather you have 60 cents on the dollar than have no dollars. That's the first start.
Wow, that's fantastic. And any other words of advice that you might give in terms of, even for one that's maybe been in business for a year or two, and maybe some things have changed in their business, maybe they've had to pivot. What should they know, or when do they know that they should look at their company differently?
Mainly when money is coming in, I think. I mean, I like to tell, especially new businesses, to get in good habits too. Make sure that you are accounting for things, and make sure you're getting your systems in place, your internal controls, things like that. So when, as you're starting out, it's just like you tell your children, you want to build good habits. And so that's another important thing I think that we need to share with startups.
I would also add, and it's one of the tax planning tips that I thought would be appropriate for many of the entrepreneurs, and I know many entrepreneurs are out there and they're using the internet and they're trying to figure out what they can do themselves, but something that helps a lot of people are tax credits. So you've got, especially in the COVID era, you got the employee retention credit, there's healthcare credits, but there are many credits that people don't know about. Just research them. There's R&D, research and development. If you're in Georgia, there's a retraining credit, which means if you're learning something new, you can get a credit for that. There's opportunity zones. So if you're in a certain area of the state, they give you a credit for bringing on employees. So just go out there and Google a little or talk to your CPA, and you can get some good information that helps you without having to spend a lot of money because you're already spending it. You're just getting some help with that.
That's really great advice. Any pitfalls or watch outs that you know about, that you can share, that maybe mistakes that you've seen entrepreneurs unwittingly make, so that you can kind of say, stay away from that, don't do this?
That's a good one. My answer to that would be that you vet the people that are giving you advice and talk to other people, because there are people out there will just tell you to do things. We were talking earlier about, running your house payment through the business. That's just not good in any situation, but there are people out there that'll tell you. Maybe, Terry, you can address not wanting to have income as opposed to not wanting to have income on your financial statements. Like we were talking about going to a bank and
Right. So, a lot of our entrepreneurs will have to get some financing or something like that. And so you want to make sure that, like I said, building those good habits, making sure you have your financial statements in order, making sure that, the expenses are appropriate. If you need to capitalize something and show it as a fixed asset and take the expense over the life of the asset, that's important as well, because the banks are going to look, and one, they're going to look to see if you're a going concern. Can you make it with what you're doing? And so if you're going to have financing, the banks are going to expect you to report back to them. So it's important to get your financial statements in shape.
Can you speak more about not mixing your personal and your professional or business finances? Because certainly that's one of the things that we see at the Russell Center, that oftentimes, particularly when they're starting out, particularly then when they don't get good advice, that they often do, maybe because it's easier. But can you talk about maybe why you shouldn't do that?
Well, starting out, you're putting a lot of your own money into your venture because that's what you believe in, and you feel comfortable that this is what you want to do and that it's a good idea. But, so many of the IRS audits that we see focus on what's going through the business. Is it ordinary and necessary are two of the big words that they'll use. So if you're paying personal expenses that are not ordinary and necessary business expenses, sometimes those can get you into trouble. So you don't want to be buying a jet ski for you to use at the lake and during the summer and running that through the business. You just want to make sure that you're keeping it as clean as possible. And it's hard to do sometimes, because I always stress to people who are starting a new company, make sure you have a separate bank account, make sure you have a separate credit card to use that's exclusively for business. But you're mingling so much of your own money, trying to keep it afloat and get it going and everything else, that sometimes those personal expenses get mixed.
Yeah.
The lines get very blurry.
I would add that maybe a way to look at it would be, if you were investing in a business, if you were giving it to somebody else to run your business, would you want them spending the money on that to make money?
That's a really good point.
Do I need to pay for your house to be able to produce my widgets? Maybe not.
Good
yeah.
litmus test
Yeah.
to say, should you be doing this or not?
Right.
Yeah. And one other question I want to ask you about in terms of changing tax laws. It seems to happen periodically, maybe when there's a change in government or something like that. But how, as an entrepreneur, can you anticipate that and make sure that you're well positioned so that whatever the changes are, it really helps your business thrive and grow?
Well, we have a big pending bill right now, and we've all heard about it. Over the last several years, Congress likes to give CPAs a little Christmas present by a new law change or something like that. And so this is pending legislation that is coming up, and there are a lot of changes. I mean, it's been talked about since the moment President Biden took office. So a lot of the things that were scaring us as CPAs coming, and scaring clients have been eliminated. Like there was a lot of talk about the capital gains rates going up as much as to 40%, where they've been at 20% for many years. That's been eliminated. I do a lot of estate work. There was a lot of talk about the estate tax changing. All of that's been eliminated. So there are some things that are going to happen. He's really focused on no tax increases for people who make less than $400,000 a year, which is going to be, a lot of people starting out. But there are some changes that are going to take place. One of the things that we do a lot with, and I'm going to take this from you. We have a lot of people that will do what we call a backdoor Roth. So you make a non-deductible IRA contribution. Maybe you've made too much money and you're not eligible to make one. It's a non-deductible contribution, and then you immediately roll it over into a Roth. Because if you change from a regular IRA to a Roth IRA, it's typically taxable. And so these backdoor Roths are allowing people that can't make a Roth to convert. That's going to be eliminated as of 1/1/2022 if this law passes. So that's something that we've seen a lot. There's also talk of, if this law passes, that converting any IRA to a Roth is going to be eliminated going forward and starting in 2031. That's a long time away, but could possibly be in that law.
Yeah. So I want to just say to the Russell Center entrepreneurs, this conversation for me has just emphasized and reiterated why we need to partner with Frazier and Deeter and why you need expert tax advice as you build your companies, because the complexity of what you're dealing with in addition to everything else is often just something that it's much better to leave to the experts. So as we just ask for maybe a final thought from you to our entrepreneurs who are really excited to meet you and to benefit from your expertise and maybe leverage that in their companies. So any final thoughts or comments that you want to share?
My final thought is, and it's Jim Frazier, the founder of our firm, had this, is that you need to invest in yourself before you invest in others. So make sure your business, as Terry had mentioned earlier, is well-founded and that you have your eye on the prize and you're making sure you do the things internally that you need to do so that you can go out and make the business work. And if I could just add a little thing, Frazier and Deeter has a great website where you can just go on it for free, and we give the updates on taxes, and there are other accounting firms that do it as well, but that's just free advice that you can get. We don't know what you don't know if we're working with you, but if you see something that piques your interest, you ask a question and we can help you on that.
Wow, thank you. That's great advice.
I just like to talk about, the entrepreneur is one part of the team. We're another part of the team. I would never, practice medicine on myself, more than WebMD, I guess. But you definitely
Google it,
the entrepreneur needs to focus, like Donna said, on what they're best at, and let us focus on what we're best at. So it's important to build out that team. You need your attorney, you need your other people. I mean, Eddie and I partner a lot on clients because he's much better at the business end and I'm much better at the individual side. And so not everybody's going to know everything, and the entrepreneur should not feel the pressure to know everything and be able to answer all their own questions. Surround yourself with a team and let us be part of that.
Wow, I love that, Terry, because that really says that you don't have to do it all alone. And entrepreneurs often are isolated and they are doing everything. And here you are saying that doesn't have to be the case. So Wow, thank you.
Yeah, and I was going to say the same thing Terry was going to say. Terry just said, get your team of professionals as early as you can, in building your business, because there's a lot of things that you will miss trying to do things on your own. So whether it's legal, accounting, you want to get that professional as soon as possible.
Wow. So Eddie, Terry, Donna, I can't wait for our entrepreneurs to meet you. You all are awesome. And I know that getting good tax advice will not only help them grow their businesses and thrive, but actually it will release some of their anxiety and stress of building their businesses as well. So I'm so eager to end the year and start the year with this amazing partnership. Thank you, each one of you.